In this video, we're taking a closer look at Sofi.
The original founder resigned over sexual harassment allegations in 2017. The replacement was hired from the same social media company whose own internal culture had been publicly questioned. The company started as a student loan refinancer, pivoted into a bank, a brokerage, a credit card, an insurance provider, a budgeting tool, and a financial planning service. Then it introduced a fee on the Robo-Advisor it had marketed as free. Then a data breach exposed the personal information of over 38,000 people. Then a trading glitch blocked accounts for up to 48 hours. The pitch is that every part of your financial life belongs in one place. The risk is that when something goes wrong in one part, everything connected to it goes wrong too. A user whose bank account was closed for a disputed negative balance lost access to their entire relationship. Not just the bank, everything. The company was founded in San Francisco in 2011 as a student loan refinancing operation. The original name combined the words social and finance. Alumni from one university funded loans for graduates of the same university. The model worked well enough to reach unicorn status by 2015. Then the founder was accused of fostering a culture of harassment. Multiple employees came forward. The story broke in a major financial newspaper. He resigned. The board hired a former executive from a major social media company who had previously worked at one of the largest investment banks. That hire stabilized the brand and redirected the strategy toward becoming a platform that replaces every financial institution a user might need. The bank charter arrived through the acquisition of a small community bank that was converted into a nationally chartered institution. The charter meant the company could take deposits directly, rather than relying on partner banks, fund its own loans with those deposits, and offer higher interest rates on savings accounts than competitors without charters could match. Two technology acquisitions followed. One provided the infrastructure that powers banking features for other financial technology companies. The other provided cloud-based core banking software. The combined technology platform now generates revenue from business clients alongside the consumer products. The company went public through a blank check merger in 2021 at a valuation of over $8.5 billion. The stock price has more than doubled from its 2024 low to nearly 20 in February. 2026. Revenue reached $3.5 billion in 2025, with consecutive profitable quarters. 11.7 million members across banking, investing, lending, and insurance. The financial trajectory is the strongest of any platform in this series. The platform did not restrict buying during the January 2021 retail surge. That decision, shared with only one other platform reviewed here, gives it a trust record on that specific event that the larger competitors cannot claim. The all-in-one strategy is both the product and the risk. A checking account leads to a loan offer. The loan leads to a credit card offer. The credit card leads to an investing offer. A membership tier bundles benefits across every product, including an investment match, a credit card cashback boost, a loan rate discount, and unlimited access to financial planners. The company calls this a productivity loop. Users call it cross-selling. The distinction depends on whether you feel served or trapped. The membership is free with a qualifying direct deposit or costs a monthly fee without one, which means the platform incentivizes routing your salary through it before any other benefit activates. The cross-product contamination is the problem nobody in the marketing department wants to discuss. A bank account closure triggers the loss of every connected product. A fraud flag on one service freezes all services. A data breach exposes information across every product the user holds. A user whose partner sent a domestic payment through the platform had their account frozen for a month. It took a complaint to a regulatory body to release the funds. The account was then closed after the complaint was resolved. The platform's response to a regulatory escalation was to end the relationship entirely. That pattern appears in multiple reports. Raise the issue through internal support and nothing moves. Escalate to a regulator and the account gets freed but then permanently closed. The data breach in late December 2025 through early January 2026 exposed names, dates of birth, addresses, emails, phone numbers, employment, and education information for over 38,000 people. No financial data or passwords were compromised. The breach was disclosed nearly a month after it occurred. For a platform that holds banking, investing, lending, credit card, and insurance data in one place, the breach illustrated exactly the risk the all-in-one model creates. One entry point exposes the entire relationship. The Robo-Advisor fee introduction is the clearest example of a bait and switch in the platform's recent history. The automated investing product was marketed as free. Competitors charged a percentage of assets under management. The platform advertised the absence of that fee as a competitive advantage. In November 2024, the fee appeared. No advance warning, an email notification after the decision was made. The fee matches what the competitors always charged, which means the advantage the platform used to attract those users no longer exists. Users who chose the platform specifically because the Robo-Advisor was free now pay the same rate they would have paid elsewhere. The product still does not offer tax loss harvesting, a feature that competitors at the same price point include. Users reported withdrawing to self-directed accounts or leaving the platform entirely. The trading side has no per-trade commissions on stocks, funds, or options. The order routing model sends trades to market-making firms through a clearing partner. The revenue from this practice is small compared to the lending and banking businesses that generate the majority of the company's income. A trading halt through the clearing partner in May 2024 left users unable to buy or sell for between 30 and 45 minutes. A separate glitch in February 2026 executed incorrect trades and blocked affected accounts for up to 48 hours. The platform did not restrict buying during the January 2021 retail surge, which alongside one other platform in this series gives it a trust advantage the larger competitors do not hold. The regulatory record includes fines totaling just under $2 million before 2025 for customer identification failures that enabled a multi-million-dollar theft, securities lending supervision failures, and an undisclosed conflict of interest in the Robo-Advisor's use of its own funds. No new fines have been imposed between January 2025 and March 2026. The financial industry regulator and the securities regulator both show no pending actions. Sofi for anyone who wants banking, investing, lending, a credit card, and financial planning in a single application, where the bank charter means deposits are insured, savings rates are competitive, and loans are funded internally rather than through partners, where the stock has more than doubled in value, and consecutive profitable quarters show a company that has outgrown the startup phase, and where no trading restrictions during the 2021 retail surge give it a trust record the largest competitor cannot match. Accepting that the all-in-one model means a problem in one product can cascade across every connected service, that a data breach exposed personal information for over 38,000 people and was disclosed nearly a month later that the Robo-Advisor fee was introduced after years of marketing the product as free, that a trading glitch blocked accounts for up to 48 hours, that cross-product account closures following regulatory complaints are documented, and that customer service across the integrated platform is described as fragmented, with users transferred between departments that each deny ownership of the issue. Everything in one place, including the risk. Every choice is a trade-off. At least now you know what you're trading.